Tonight is our Victorian Industrial Private Client event. It's about creating an environment that's conducive to creative discussion, thought leadership, looking at 2016 and beyond. CBRE is about partnership and partnering with our clients. It's delivering a fully integrated platform with diversity for that competitive advantage. In the room tonight, we've got clients ranging from single asset owners all the way through to major portfolio owners. And they're mixing with our operators who specialise in leasing, development sites, vacant possession sales and investment sales, as well as leaders from our Victorian, New South Wales, Queensland and New Zealand offices.
Quick snapshot, 15, what are the key takeouts? RORY investments?
I thought we saw continued yield compression, probably in a market that people didn't think could get any tighter, and certainly portfolio platforms, particularly from the offshore groups.
Land, we're back, specifically in the West. And Globo sales are back. Retail land sales are back. We're on.
Yeah, Chris, 2015 was probably the strongest leasing market we had for the last 5 years. We saw all across Victoria about 80 lease transactions above 4,000 square metres.
So lots of activity, lots of volume, lots of transactions. How's this tying into supply chain, Adam?
Well, that's good. So we'll hear from you guys that things have been busy, and we'll talk on behalf of users of real estate, predominantly tenants, and some of them are owner-occupiers. One of the ways they survive is by adapting and evolving so they can actually make more profit and stay in business. And one of the key parts of that obviously is new real estate. New industrial property, if they get the right industrial property, is going to help them survive.
In 2013 we had 53 transactions in Vic above 4,000 metres, then went to 67, then it went to 80.
Right now, there's almost sort of three bands of pricing. There's 1 to 5 mil, and then there's 5 to probably 17 or 18, which captures the high net worths, the syndicates who still like a little bit of yield, and that's a really sweet price point for a lot of investors in this particular space. And then you've got the institutional grade assets, which are 25 plus. And then as you go further up that price point, the yields just come down, and it's a different sort of buying mandate, if you like.
In the southeast, for example, you've got people are asking the question: Are values rising? Well, the evidence is there. Yes, it is. If you look at areas like Moorabbin, or if you look at areas like Mulgrave or Mount Waverley, there's redevelopment plays going on now. So, but if you look at Dandenong, for example, there's still an abundance of land, but it's controlled by probably 7 major landholders. If you're a developer that's looking to get in and you want to buy one pad of, or if you're an owner-occupier for, say, you want to buy a hectare, there aren't many options for you. So those serviced and ready to go blocks are going to hold their value, if not creep up a little bit in value.
I am seeing land speculators again buying retail blocks and just sitting on them and then banking for the price to rise. I haven't seen that since the pre-GFC.
One of the big trends is to automation, right? And the big trend to automation is you're going to get rid of people. And if you get rid of people, you can afford to have, a building in a different location that's maybe worth a bit more money, whatever. So it's not just about the building, it's not about the rent, it's not just about the location, it's about the business. Understand your tenants, get to know your tenants, work with your renewals, make sure that you understand why they need to be there.
I think probably where land is becoming scarce in the southeast market, probably getting creative with the brownfield opportunities.
Think about what's around you, analyse what's around you, spend some time in understanding that piece, and then match it against what your tenant needs.
It's important that you can find a bit of land that you're not paying full retail for, identify it, put your foot on it, don't settle on it for 18 months and watch the landscape around it change. There are opportunities like that.